Welcome everyone to the Kendall Report. It's Monday night instead of Sunday night, long weekend holiday. So we're coming into a situation here as the markets start to unfold that maybe, just maybe, we're setting up a very short-term couple-day bottom here. I think we're getting a little extended. But before I get into tonight's video, make sure you subscribe, like, and share these videos. Hit that notification bell so you know when I come live. So let's get into tonight. And I also, before I get into it, I do want to thank everybody that came to the seminar that I did on Saturday. I apologize for the ending. I used Streamlabs. It completely crashed. After 3 hours, it crashed and couldn't get back to stream to complete it. But I do have plans, just so you know. I'm going to be doing a free seminar on day trading using the indicators, understanding trends and how to use all three of the PPMs and all the tools in the suite, as well as looking at swing trades using our price projection tools. So I'm going to be doing those over the next probably 10 days or less. I'm just going to light the screen up when I have time and we'll do them live. So it's not going to be a big plan, but I will have some elements to show you. So let's go ahead and get into tonight's video. So post week after the Fed, and the title of this video is Fed Signals More Inflation. Listen folks, they're not doing anything about inflation. And there's a couple things that I should point out, is that there's a lot of things going on right now. They could raise rates substantially and it's not going to change inflation much. Interest rates aren't going to control what's going on right now. Everything's been so disruptive. You've got, the energy patch disrupted, everything. But the one thing that is coming into play is the potential. Let me rewind that. It's not the potential, is that the coming recession. So we have inflation and recession. So if it ends in a shun, we've got it right now. And is it going to be stagflation? I don't think so. I think it's just full out potential collapse here in the economy as we go through maybe the next 18 months. Maybe it'll be, somebody pointed out that Joe Biden's bicycle wreck was due to his overinflated tires. I think they said because of overinflation, but it's pretty funny. The memes out of that was pretty precious. But the point is that we're coming into a period of time after multiple years of stimulus and unrealistic interest rates, trying to get some kind of normalization. I'm not sure that's what the Fed is really going for. I'm not sure what they're going for, and I'm not sure anyone does know what they're actually doing, including themselves. So my general idea here is that we're going to see a lack of action if we go over to the next couple quarters. I think we actually have another Fed meeting in August, so we're probably going to get at least 50, and if they were smart, they'd do 75 basis points like they did in this last meeting. But the realities of what we're dealing with here is maybe higher rates will do something, but what it will do at some stage, there will be a destruction of demand, and that will be what's driving a recession, and maybe things are going to pull back, but to what point? One of the things that you have to understand is wage inflation doesn't go away. You can't give somebody a raise and then back it up. It's sort of like I always talk about utility rates or postal rates. Once they raise them, they never go back the other way. So that's going to be the case here. You're going to have elements of pricing. There's probably the WEF talks about the Great Reset. Well, this is a reset on a lot of pricing that I don't think's ever going to go away. I think these things are going to be permanent. And so will it always be inflation? At some stage, the numbers will come in line and maybe we'll get some normalization here. But, we're looking at all types of issues. I'm not going to go into a lot of depth in this tonight. I just want to bring up the narrative of what's going on and that they're really not doing anything. And I'm not sure there's much they can do, even if they raise rates. And maybe that's why they realize that. So they're just kind of keeping things going. I have some notes here that you could almost argue that the Fed was dovish in this meeting last week. But the problem is dovish equals bearish. And the reason for that is because of no one's feeling like they're really attacking this inflation situation. And, runoff and all the things they talked about, it was just a bunch of noise. You saw how the market responded to it. S&P last week down 5.8, down 22.9 on the year. Nasdaq down 4.8, down 31, and the Russel down 7.6, down 25.8. So those are really bad numbers. I don't see anything really recovering in a big way. I'll go through the technicals here in a few minutes to show you exactly what I think is setting up here. It's nothing really bullish, but we are seeing some signs of some things that go on, but certainly not in the database. When I go through the database here in a minute, you'll see there is no new trends. There's nothing going on. I'll save that for the next few minutes. Yeah, I'm looking at my notes here. So last week we even saw, energy stocks. Energy was the one thing that hadn't been hit. Well, they changed that. They absolutely hammered the energy stocks. So everything is really out of favor. We actually went, and I think it was Tuesday of last week, our ETF hack, that oil XLE hack that we did, went to about 45% cash. It is coming into Monday 27% in cash. So we now own only about 30% of the stocks that are that were in the ETF hack. So we're basically totally protecting that money, and it did take a pretty good hit. We lost about 7% on this decline. It was fast and sweet. The only things that we're holding in some of those are some longer-term trends. All the short-term trends have been neutralized, and nothing going on there. So we also had the crypto collapse. I'll go through that tonight, just talking about Bitcoin's continuing. I just look over here. Bitcoin's continuing to hang in around 20,600, printed down at I think 17.8, depending on the exchange you're looking at. So lots of carnage out there. And just a final thing that I will talk about before we get into the technicals tonight is really what I'm seeing here is that there's just this mass liquidation, and there's been this is, believe it or not, this liquidation that we're seeing right now, especially in the crypto area. I'm not trying to hammer somebody that's lost a lot of money. I know a lot of folks are just going to hodl and hope it turns around. Maybe it will. Maybe there's a lot lower numbers, but the reality is it's not going to come back very fast. It's not. I don't see what would be the driver of that. Money. I've talked about this before, and I see a lot of comments after I make this comment I'm about to make, is money is vaporized. There's nobody on the other side of those crypto trades. There's some shorts that you can do in the futures and some things, but no, it's not material. It's the same thing with these stocks. Not everybody's short. It's not like the futures game where it's a net on, there's a buyer and seller or the options on each side. It's not like that. They're vaporizing money that is not going to come back. And I think one of the bigger hedge funds, I think I've got this right, I don't remember the name, but there was a $10 billion Bitcoin hedge fund that just went belly up. Okay, these guys are done. And they were reasonably smart people. I think I've seen a podcast, but somebody made a comment on Twitter. I thought it was the best I've heard yet. This is good because now even the so-called smart guys are as stupid as the rest of us. And I thought that was just a brilliant comment, because people that think you're smart, you get in a lot of trouble. And our old battle call on the trading floor was, I'd rather be lucky than smart any day. Smart gets you in trouble. We've seen that over the last couple of years. I mean, look at Kathy Wood. I mean, she's down 70%. She thinks she's smart, and she's got a bunch of amateur analysts that think they're smart, and it's been pretty brutal on anybody that thought they were smart. So I'm just going to continue to go under that mantra. I'd rather be lucky than smart any day. And really just kind of hang out in cash. So let's get into the details. Let's take a look at the database and let's see what's going on there. So this is the daily. We're at 12.62. We had 177 sells versus 92 buys. There's not much left there. I'm going to show the numbers are here on the screen. I'll discuss them before I show you the actual percentage. But the intermediate had 1,115 sells, only 83 buys. I'm going to flip this over here. I'll make sure I get it on the screen right. There we go. It's at 7.46% bullish. The last time I've seen anything like this is back in 2008. We got down to like 6.5%. So what that means, out of 100 stocks, there's 6 that are long. We're looking at right now 14,946 symbols in our database. Very vast database, covers mutual funds, ETFs, virtually everything, right? All the stocks, we're looking at 7.46. There's only 1,204 stocks out of the entire database that is long. So it has been very brutal. I thought several weeks ago when we saw the database climb up into the short term, we got into a 60 percentile range. And I thought, okay, if we can hold that, we're going to get some traction on the intermediate. Maybe we'll see a little turn. There's nothing here. So I'm just going to make this statement. We'll go to the technicals here in a minute. But really, we need more traction in this to get any kind of material bounce. And by material bounce, I mean that to get any type of rally, we need more trends that are visible. And we'd have to get back at least above 22% to get a little bit of a rally. Doesn't mean we can't rally. I'll lay out some of the details here. Right now we're really 8 calendar days away from the last trading day of the month, which is that D date that I've been talking about for the second quarter end, which is going to tell us exactly what's going on for probably the next 4 to 6 quarters. And I'll just set it up as I'm talking about that. And I'll be covering this as we come in through the next week. My expectation is we could have a positive bounce in the third quarter. So I'm not in the camp that's super bearish and we're just collapsing here. That's possible. That's very possible in the configuration of things from our database. That's certainly possible. For those of you that are institutional using Wavetech, you're probably mostly in cash, and you don't have much risk whatsoever. And that's how this process works. The Wavetech and Portfolio Expert are long-only process. There is no shorting in there, just because it was built originally for the retail investment community. And from an advisor standpoint, they just don't go short. We built that. We considered putting the shorts in. We have the logic, but we didn't see that was going to be used, and that wasn't built for the retail or any kind of speculative. It was really about managing money, doing the advance and protect, where you put money to work when they're trending, and when things start to when risk off comes, you just pull back, you go to cash, you hang out for a while. We have strategies that have been in cash since December 17th, 100% in cash. And you can say cash is trash, but you're looking at 22% losses, and that's just a good thing to miss out on that. So you get into the FOMO and you end up owning things when you shouldn't. So let's go ahead and get into the technicals. Okay, we're taking a look at the S&P here, and we're just seeing massive acceleration. There's no way to make this picture look pretty. The PPM3 is cut through a second derivative, but that is a function of the look back. That's a 40-day look back and there's some volatility that happened there. It's really not material. It doesn't mean anything. You look at PPM1, minus 1.12, minus 0.29 on PPM2. Those are massive trend numbers on the downside. So let's just talk about this. The 10-period moving average right now is at 38.11. It's dropping 40 handles per day. So we're looking at 38.80, and I'm going to show you some things that will potentially show us where the rejection point's going to be, and whether or not I'm going to try to set this up, whether or not we'll see a new low in this pattern. I think there is a good chance. I'm only looking at maybe a 2-day move to the upside. And when I go through the interest rates tonight, I'm going to talk a little bit about dollar yen as well, because that's still part of my narrative that I'm continuing to push, because I think it's something you have to continue to watch. So if we look at the market grid for today, let me bring that up so you can see it. Really the best thing to do is just get the indicators and have them on your desktop. But let's go here. We got right here, R1 37.42. We printed so far 29. So we're probably looking at the potential of 42 printing. R2 is 37.71. That's going to probably be a point to watch. So maybe we get that. If we look at things realistically, this is the second day. We're about to go into the potential of a 3-day possibility of doing a 5-day up. And that is about all we could hope from here. But as we've seen before, if you remember right before I went out of town, I was talking about a 3-day rally and watching 42.15. Well, we got rejected 42.08. And the market just collapsed all the way down from 42 handle down into 36 handle. So we're definitely, this trend is brutal. There's almost no reason to go through anything. I didn't talk about the economics that are coming, economic releases coming out, but I'll just come up and just talk about those here as we're going through it. We're looking at, on Tuesday, existing home sales. It's at 5.46. I think this number is going to get hammered. And there are still some hot areas in the country, but I think these numbers are going to start to come off really hard. And I think the housing market is going to get into a bit of trouble, especially with mortgage rates spiking up well over 5%. These are big, big numbers. And, you know, they're already seeing across the country a lot of price reductions in real estate. So there's some things built. When I'm talking about how the Fed and the inflation situation isn't going to get much better, part of that number is the real estate. That number is going to come down slow. And I still think we have that replacement cost new factor that's out there. But I have to tell you that I'm really concerned about the housing sector, because I think it's about to really come under some stress. It hasn't seen any stress. Is if you go back and just to talk about the economics as we're going through the S&P here, if you think about what's going on with the bigger picture on the economy, go back to 2020, the whole narrative of working from home and all that, there was a big shift in demographics and people moving from different places in the country. And that is actually slowing down to a point now. There's still a lot of movement, but that was probably a one-time deal. So you're going to have to figure out, we're still underbuilding every year right now from as far as demand goes. But my point is that you're going to see this numbers pull back. We'll see how far they go. So let's get back into the technicals. I want to go through the weekly chart here on the S&P. And this is probably the most significant chart to watch here. And I talked about these numbers over the past several weeks, but this target is down to the 200-week moving average. I went through an entire scenario 2 or 3 videos ago talking about how everything is seeking this 200-week moving average, not 200-day, but 200-week moving average. But we're seeing PPMs trying to stabilize, but they're stabilizing super negative. 1.63, 0.78, 0.39. There's still way big overhead resistance. So if we look at just from a market grid standpoint this week, so I want to set this up. I think we're looking at the potential right here. R1 is 26. We've actually already penetrated that. R2 is going to be the number to watch, which is 37.83. That goes in exactly with the 10-day moving average. That's going to be huge from that standpoint. And if we look at the 10-week moving average, it's up at 4,000, and it's dropping only about 60 handles per week. So even if we manage to get above 37, get into the 38 handle, we're coming into a point of another rejection point. It's going to be, like I said, I'm really looking for a very short-term rally of some sort. I'm not even sure the way this thing's trading that we're going to be able to much on the upside, but I'm not sure there's a lot of downside from here either. We're just sitting here on some major numbers and seeing some stability from very negative numbers here on the weekly. So let's take a look at the Nasdaq. We'll start with the weekly. And the weekly charts are also turning up. The interesting thing, and if you just think back on every video that I do, this comes up, especially on the beginning of the week videos, is that PPM2 is actually turning up and crossing through its first derivative or second derivative, not the first. And that's typically a sign that we want to move back into these moving averages. That those numbers are at 12,318 as a 10-week moving average. It's very possible we can get a rally into those levels. That also puts us, if we look at just from a market grid standpoint, we're looking at R2 is 11,669, but we get RXT for the week, it's 12,042. So there's easily where we could get a decent rally here. I've said it before, if you look at the VIX is at 31. You could almost always buy 31 and sell 20 in the last several months. So there is some potential here to the upside. I think there's going to be a lot of pressure. There's actually not any real news coming out. You know, we've got the Tuesday numbers on existing homes. After that, we just have claims on Thursday, which is typical. Who cares? New home sales again on that's existing home on Tuesday. On Friday, we have new home sales, and those numbers are, I think, going to come in bad. So those are only reports that we have coming out this week to even look at. And so we're getting a little bit of positive. Like I said, as far as the market grid goes, I think R2 for sure will put us at 11,600. So it's about a 200-point rally up there. If we can get through that level, then R3 is pushing us 11,860, just rounding numbers off here. So that pattern seems to be pretty solid. We go to the daily. Now this is where the issues come in. The daily 1.09 ppm1. So that number there is coming in at 10 period 11,006. So that brings us back on a weekly to basically an R2 weekly. So about 200 points higher. That's where you're going to watch those rejection points. Hopefully I'll be able to set these up maybe in tomorrow night's video, something of that sort. PPM2 though, on the daily is turning down, PPM3 up. So we've got one of those mixed situations where we usually set up some kind of sideways range. So just expect to see this thing kind of waffle around out here. It's going to be pretty treacherous. We should continue to see elevated levels of volatility. But like I said, every time I see this VIX at 31, in the back of my mind, I'm basically going, should you be buying this? Every time it's 31 something. I think we got up at the spike at about a 33. I won't bring it up right now. But these are just places where the market's going to rebound. It doesn't mean there's a new rally, all-time new highs. I think one of the funniest dialogues that I see when you watch CNBC, especially the halftime report, because for the most part, 85% of anybody shows up in a halftime report is amateur level investor. And what they're talking about, there's several people talking about finishing this year flat on the year, maybe positive. There's a couple talking about all-time new highs by year end. What is going to cause that? What is that? I'm not saying we can't rally back. Like I just said a few minutes ago, I think we get a positive Q3 from a market, meaning we'll probably close Q3 higher. Then that's going to set us up for September, October, some kind of reversal pattern. We'll see what sets up. Could change. I'm sure somebody's going to try to hold me responsible for even making that comment. But I do think that we're setting up the end of this month. I think we're going to get a quarterly confirmation on all of these indexes that there's going to be longer term 4-6 quarters down, like a year and a half, where we're going to be under pressure. But that doesn't mean we can't rally for a quarter. And it looks to me there's a pretty good chance for that. Take a look at RTY, the futures on the Russell. This is the daily. Similar pattern, but huge negatives. I mean, Russell was down 7.6 last week. That was a big number, down 25.8. But that was about that was the weakest market last week. And I think a lot of that has to do with the scenario that's still hanging around the interest rates. We finished at 3.23, so we came off the highs of the interest rates. But the point is that we've got massive amount of resistance coming in. That 10-period moving average, if you think about it, folks, many times I talk about that the market will climb along it on that upward slope. Well, we have a 1.29, so I talk about the angle of attack. If you go and watch the seminar that I did on Saturday, it's 3 hours long. But if you get to where I was covering the PPMs and I covered the angle of attack theory in there, make sure you watch that, because then you'll understand these indicators at a higher level. But this angle of attack is a serious one. That means there's so much downward slope, the probabilities are not very high that we're going to trade above that 10-period moving average. Now, 2 or 3 days sideways and consolidate, that probability could change substantially. But if we were to print up there today, I would look for a rejection. And that number right now is at the 1738. So that's quite a ways. That's 40 handles from where we're trading right now. That's a big move here in the Russell. My point is, just expect that we're still going to have a lot of pressure. Any sharp rallies in this kind of environment should be, you look for a rejection. You should be selling those rips yet, I think, and a short pullback from that standpoint. Let's go over to the weekly Russell just quickly. Same type of scenario. The PPM2 is turning up. It's still negative 0.67. We're below the 200 week. The 10 week is up at 1812. We're looking at substantial downside pressure. And what this is going to mean is that any rallies are going to be contained right now. And even though they're that negative, doesn't mean they're just going to collapse, okay? I think the Russell is going to try to get back to that 200 week on the backside of that, and then we'll see how it responds there. But all of these charts that I'm talking about here, they really are somewhat at an extreme. We printed down in that 36 handle on the basis of the S&P. These are at an extreme, but there's still rejection points ahead. And while people want to buy this. They've got a hair trigger on getting this. And just looking at economic news this week, there doesn't appear to be really anything unless these housing numbers just come in terrible. And then everybody wakes up and realizes not only are we expecting, I think I saw an interesting number that 60% of CEOs now are expecting a recession in 2023. What it should have said, the headline should have been 60% of CEOs believe we are in a recession right now, because we are. And whether the numbers illustrate that or not, man, if they can manipulate it so we get a positive quarter, who cares? It's all in the liking. And I can tell you, if you go and buy gas, it may not mean anything to you, but a lot of people it does. These are big numbers that's being drained out of demand in the economy, and it's started, and not mention buying food as well. So anyway, folks, just know that there's going to be a lot of resistance overhead and some rejections coming. Okay, next I'll go through the interest rates, and this is the fun stuff, I think, because this is where a lot of things that are going on right now are going to show up. Okay, so we got a big downside reversal. This is the weekly 10-year. Let me make this chart full here so you can see it a little better. So you got the reversal. We still have some pretty robust PPMs that are coming out, 1.81, 2.92, and the number that you're going to watch is just like when we were watching crude oil several weeks ago, and I was talking about the 104, 106, and it keeps going up. That it's the 10-week moving average that you're going to have to watch for here, and that number right now is at 2.95, and it's going up about 5 basis points. So we're really looking right at 3%. So the floor is probably around 3.10, 3%. Even if they pull this thing back, there's going to be a ton of support. And I just want to I'm going to draw something in real quick, because this is important, especially if you go back and watch the review or the presentation that I did on Saturday on the PPMs and the angle of attack. But I just want you to see the angle of attack. This is a very big intermediate trend. We had this set up over here like this, and the same thing happens. We start to look at PPM start to decline. We're getting a little bit of decline here, and if you start to see this happen, then what you're going to do is you're going to come back into probably as low as that pivot point, which would be, I think, ridiculous to even think, but 2.5, 2.25. I don't see that happening in this environment. I believe this 10 is going to hold here, and this angle is going to be a big number to look at. Like I said, around 3%. Next week it'll be about 305, all that stuff. And I see. I just noticed my favorite bot showed up, so let me just get rid of them. Bear with me 1 second. Okay, so let's go to the daily chart here on the 10-year, and then we'll go over to the yield curve, and we'll talk about the yen. So looking at this is the daily. We're right at the 10-period moving average already. We got an RTX sell signal 4 days ago. It did spike up the next day, but then we started this decline. PPMs are still very positive, but this would be where we're likely to come into the 3% level. That's where this is coming. 297, 3% is going to be huge, huge support if we get down there. That's 23 basis points. I actually don't see that in play at the moment, but these things are starting to roll over. We also got right on that high, we got that cycle high. The day that we printed that 348, 3.48%, we had a cycle high that day, and that's been pretty dominant since. So we're going to have to burn off some of this momentum, see if we get some stability around somewhere between 310 and 3 even, and that's a pretty big move. That's a 0.25% move. So what possibly make that happen? I'm not sure. Technicals are saying that we've got good support right here with a 0.89. The probabilities are saying we should hold them around here, but a rally up and then start to decline again. We're going to burn off a lot of this upward momentum here and then set up the potential of going down to those averages, which also are going to set us right into the 10-week on the intermediate trends. So those things are likely to continue to happen from the standpoint of the configuration that we're in. So let's take a quick look at the, so I'll have to bring this up real quick. Sorry, I thought I had it loaded. So we'll bring up the yield curve here. And the yield curve, interesting enough, was inverted, and there is some still inversions around in here, but we're minus 0.46, so we downticked a little bit. The 1030s, which a lot of people don't look at, I do, just because I worked with the banks and consulting large bank trading rooms for years, and also mortgage pipeline folks. These are important numbers that I have up here, and so the 1030s are not inverted. They're +5. They were inverted though, and that's a big thing when the 30s under the 10, right? So that's huge. You know, everybody talks about 210s and all that. That's amateur retail talk. But on the banking side, when you get into the 530s and the 1030s, those are where the rubber meets the road. Because that really reflects a lot. So we're negative on the 530, we're back positive on the 1030, but when you get the whole back end of the yield curve rolling over, that's a big deal, folks. Everybody's focused on the front end and the 210, that's not where you want to watch. When you see the back end, so you get this curve where the longest rates there's no reward for taking risk for a 30-year bond. That's never a good sign. Okay, so that's why I watch the 1030 and the 530. All right, so let's go over to crude oil. This is daily crude. Right into support at the 40. The last 3 sessions, we continue to hold right along those levels. We're looking at the 108.29, so far low 106.82 on Friday. Today we've got a low of 108.70, and 108.63 is the 40 period moving average. PPMs are interesting enough. We have a mix. We have a negative PPM on one, minus 0.59. PPM 2 is a +10, not in a trend mode, but we do have PPM 3.32, and that's what's holding this market right now, and it's actually trying to turn up. It's right at 0.31 right now. It looks like it could turn back up through its second derivative here. We'll see if that happens, but for the most part, what I'm looking at here is it climbing along this line. When we go to the weekly, you'll see exactly what I'm talking about here. Oh, you know what? I forgot to do the yen. So we'll do crude, and then before I go on to gold, we'll do the yen. Apologize. So this is the big story, and I've been talking about this for a while. The rising 10 through, if you look where my cursor is right here, that rising 10 through the market grid was the positive. If you look at where we are right now, and those of you who've been around the channel for a while, you know what I'm talking about. This is what I call the trend maintenance mode. I'm just going to draw this in if you're new to the channel. But this is on a weekly basis, this primarily is the setup on the PPMs. You get these surges. I'm just going to draw this in. Take me literally just a few seconds here. And primarily on PPM 1, 2, and 3. And then you get a move back in, and I'll show you exactly what I'm talking about. And then you get what I call the maintenance mode. So all these indicators they're not used like a lot of indicators, especially on the intermediate, of what you think the market is, like the divergences or anything like that. Really what you're looking at is it's maintaining that angle of attack at a high enough level that it's going to maintain the trends. So when I draw in this level here, we're looking at, this is the angle of attack. I'm just drawing them in on these green lines here, and we're just continuing to climb. So we're at 0.84 over on the left, 1.54 and 1.47. So this is a very robust trend, and the values of the 10 period moving average are still 108.14 on a weekly. That's going to be pretty solid support. You saw that on the dailies a minute ago. So this is really big. So let me just get over here, and let's, I thought I had the yen on here. Let me just get over and find where I put that. Here we go. So the yen, real quick, is continuing to be a major factor. This is the daily. We're trading right now 135.04. I do expect this to have another surge, but we're going through a consolidation. The yen should remain above about 132 during this period. We spiked down for 2 days. We get down to 131.5. We may retest that. This looks like a consolidation range. But we get to the weekly, you'll start to see a bit different picture here. And that picture is that look at the angle attack here. Even though the PPMs are coming back in here, they're still at a very robust rate. And this is the weekly dollar yen. And there's tons and tons of support here at 138, but that's going to be around 132, 133. That's where we should hold here. And the magic number for the dollar yen is 137. I think if we print above that, then there's going to be another round of selling in the treasuries, and that'll set up, maybe we bounce off some of those numbers on the treasuries, and all that sets up as well. Somebody's asking for if I think the stocks like XLE or something can bounce, and I'll just bring that up real quick. So this is a weekly, I guess, yeah. This is the weekly XLE. Everything rolled over big. Matter of fact, like I said earlier, we've went to, I might have this on another screen. Let me see if it is. I'll just cover this for a second. Yeah, I'll bring this over on the page. This is our Portfolio Expert software. You'll see here there were 10 sell orders. So I wouldn't expect much of a bounce here. I think these stocks are going to be sold down just because people are still raising money in this market. There might be a bit of a rotation out of, this has been the only sector that worked all year. And we gave back a lot. You can see the green line is that strategy. And that is that year to date? Yeah, that's year to date, what it looks like. So we gave back a fair amount because that was just a full out collapse. There are 10 orders for tomorrow's opening, and BKR, CTRA, Devon Energy, Fang, Hess, all of these are cells that are coming in that actually had longer term hold. So we're seeing some of the longer term trends broken, and we're bailing on these things because you can look at these are, for instance, let me just get to the orders here. These are all weekly sells, but a lot of these were stocks that were bought almost a lot of them in November, December, and of 2020. And so these are longer term trades that are rolling out of the system right now. And those are telling us that there's a lot of downside here. It would be what I call an echo bounce if there was anything at all, but that would be it. I would not have any expectations for anything good coming out of here, just because there's that liquidation. So there may be a bounce. If I go to a daily chart, there may be something there, but it's really depends on what you own in. It's you can look at the ETF level, but it really depends on what you're looking at here. You can see the ETF just collapsed. It's just straight down. So everything was straight up. They moved moved us back to the May lows. So could there be a bounce? Sure, but it really depends on what you own in this pattern. So next market we'll go through is gold. Gold continues just to be in this flat line. We've got lots of resistance here at 1854. We're trading 1843. Looked like we wanted to print down pretty good. Just several days ago, we got down right at the 1800 level. We actually traded down to 1806 and we got a little bounce. PPMs are starting to look a little better. Let's go over to the weekly. Yeah, interesting. I'm glad I brought this up because I did not review this earlier. But this is the weekly, is got a weekly cycle. Looks like it could be a low cycle in gold here. So that's very interesting. That's very, very interesting. Just looking at gold is that we're getting a weekly cycle. So pay attention, look for 1850, 1870 as some pivots. We might see some things move up in there, but that's pretty much all you can expect now. But this cycle that's popping up is good. These cycles on gold have been pretty good on the intermediate level. So pay attention to those numbers. PPMs are still very negative, so there's no like immediate trend, but we could see the next couple of weeks after getting this low, we maybe see some improvement here. And there was a time when we were rallying up, looked like we were ready to roll this market. Inflation numbers were going through the roof, and it felt like maybe gold's going to be an inflation hedge, right? Not so much. You know, they just hammered that thing. This was this spike over here when we printed, I'm just trying to bring this number up here real quick. We printed a high of 2,089. It felt like it was going to the moon at that time, and it didn't. That was it. That was when, who was it? Peter Schiff and somebody, Raw Paul or somebody, were screaming to buy gold at 2029, right at the high that day. I mean, anyway, I'll just leave it at that. So let's go and do our final market. We'll go to Bitcoin. I'll come back up and talk to you folks for a few minutes, and we'll move on for the night. So this is the weekly Bitcoin. I'm still very concerned about how it's trading. And this chart, we get down to 1957, but this chart does not update Matter of fact, let me just see if I can pull something up real quick. Let's go over to TradingView. I think there's some better. Bear with me 1 second while I find the. Yeah, let's just do the buy finance here. I don't know, maybe that's a weekly, but we're looking at. Let me go up on the indicators. Let's put the market grid on here. These are indicators. We'll put. We already have the fib projection, so we'll put market grid on. So just looking at the weekly here, the ranges that we're looking at from that standpoint is 19. Let me get the 19,232 is S1, S2 17,671. So we start looking at the weekly basis. This thing could get really, really ugly very quickly, and I don't believe I have the 200-day here. Anyway, I don't have this set up right for this, but the point is we're looking at very negative PPNs, 6.04, 2.27, and 1.53. So everything's down. I really don't see, other than bounces in the grid. That's about all you're going to see on this market. It's really, there's nothing really here. I don't see any reason. Intermediate trends down. I remember when I was talking about, there was a point in time where it looked like anything around 30,000 or 33 was going to be a buy after we printed that high. We set up there. We went into the fib targets that you see in the middle of the screen here, put a cursor there, and then we started getting high-end Fibonacci targets. Then we got the failure. And as I pointed out, we've actually had a weekly sell signal since 42,000, and it's still valid. If I put let's see if I have the right stuff going here. Yeah, so the sell signal here was 42,202 on 116. So in January, we got the sell signal there. We continue to just decline the 22,000 number on the 200-day, 22,413. We took that out. We're trading right around it right now, but the next level down is literally probably around 10,000 or 8,000. I don't think that's going to happen, but if we get full liquidation of this market, that's what's going to happen. And if that happens, that will probably be due to some massive equity decline, maybe a resumption of these trends. So I just come up here at the end of the video, and I just want to talk to you just briefly before we end the video tonight. There's a number of things that you need to pay attention to. This market is still in big trouble. We're in big downtrends across the board, especially equities, Bitcoin. There's just a liquidation of assets going on. It's a mass liquidation. And so what that means is when we do get rallies, that's why I talked to you earlier when we started the technical section, there's going to be a lot of rejection points. So don't find yourself thinking about new highs and big rallies and all that stuff. So if you get a good position, I talked a bit on the seminar on Saturday, and I'm going to go through some more details about doing a 3-tranche trade strategy. And if you use that strategy, that would be the best strategy for you in this kind of environment. I actually trade that way all the time, but this will be the best one to execute, because you're always the goal one is to eliminate risk. Goal 2 is to take profit. Goal 3 is you play your wildest dreams out and with a break-even stop at that point. But take a look at that. I don't think we have it marked. I'm not sure when I was talking about that stuff. I went on a 3-hour rant, so it's probably worth kind of skimming through there and trying to find some of those nuggets. And anyway, as always, I see our favorite bot has showed up again. But this one's been really, really consistent here for a while. Keep showing up. Yeah, they're coming in multi levels here. I think I got rid of them. Probably trying to do a job here, and you got to put up with these trolls. Anyway, folks, thank you so much for coming tonight. There's quite a few people out there. Make sure you go back and watch those videos. And I'm just telling you, I'm going to be doing some really cool work. If those of you, there's quite a few bought the indicators over the weekend. The live room will be Wednesday at 1 o'clock. So you get access to that. If you have any issues with that, send us an email, info@kendallreport.com, and that will get you at least to some support people that will be able to help you with any issues you have. Thanks again for watching. Thank you for being part of this community. It's amazing to have this many people hanging out. Appreciate it. Don't forget to hit that like button. Subscribe. See you guys tomorrow night. Guys and gals, see ya. Bye.